Hi everybody, welcome back to the channel, and today I thought we would talk briefly about my favorite gold mining stock. And this is a stock that we've actually been talking about on the channel here since, the stock was trading down here at $33 per share. So if you actually did see my videos back then, congratulations if you were buying around that price, because obviously since then the price has gone up to $43 per share, and investors are doing okay. Now, one consideration with this is that since this is a cash flow focused channel, we can't neglect dividends, right? Now, Newmont, one thing I like about Newmont in particular is that they pay a dividend. But keep in mind, they have been cutting their dividend. And you can take this and look at it one or two ways, right? They're still paying $1 per share, and the amount they're paying is approximately equivalent to the 2020 amount that they are paying, so 25 cents per share. And you'll see here that they're paying 25 cents again. So they were paying briefly over 55 cents back in 2021. There's a lot more liquidity in the market. There's a lot more Fed action going on. Maybe they felt more confident back in that type of market. I don't know exactly what their thought process was in terms of, raising the dividend. And now you'll see that the dividend is down to 40 cents and 25 cents. So they're still paying $1 per share, and you're still having a yield of 2.29%. But this is one consideration, because ultimately, who likes to see dividend cuts? Not a lot of people, right? So with that in mind, Newmont is a stock, like I said, we were talking about this back when it was trading at $32, $33 per share. Even, when it was up here, I was telling everybody, hey, this might be an interesting one to take a look at. And ultimately, it's a long-term play, right? This is basically the largest gold mining company in the world. They have mines internationally. And if you're looking to profit, especially with the price of gold going up, as it has been in recent months, hitting all-time highs, and you're looking to profit from the bull market, Newmont has the potential not only to raise their dividend again and maybe go back to, let's say, a 55-cent dividend or even higher, assuming they're earning more on their mining profits, which they should be as the price of gold continues to go up. But in addition to that, you have the potential for share price appreciation. And, this is not going to be one of those plays where you're going to get rich overnight, obviously, or anything like that. But if we take a look at the long-term chart, let's just say over the last 5 years, you can see that Newmont, see how we've been doing since... So we're up $11 per share in the last 5 years, really. I mean, just going back since for 2019, $31 per share. And you'll kind of notice that we've been on the decline, and we're coming back to these lows that we've seen all the way back in 2019, 2020. But we had a huge spike up here to almost $80 per share. So relative to where it was trading at, I think you still have some opportunity with this stock. And, if we're considering this on a long-term scale, the potential for Newmont to perhaps go back to $60, $70, $80 per share is there. And right now we're trading at $43, $44 per share. So you can kind of look at it one or two ways. On one end, you have some dividend cuts. On another end of the spectrum, though, they did just report earnings, okay? And they're talking in this article. I think this is a paid article, so I probably won't be able to read all of it. But really, they're just talking about Newmont's earnings and how they came in above estimates. So they surpassed by a margin of 57.1% for their earnings, which is a very positive metric. And the adjusted earnings of 55 cents per share topped the Zacks consensus estimate of 35 cents and compared with 40 cents in the prior year quarter. So this huge beat came across as a sweet surprise for investors, as the company failed to meet analyst expectations in the past 3 quarters. And that might also have something to do with the dividend cuts we've seen, as I was just showing you guys. But, not really outperforming in the last several quarters, and so that's always a consideration. But if you look at this, Newmont's revenues for the first quarter came in at $4.02 billion, up 50.2% year over year. So it topped, I guess, the Zacks consensus estimate of $3.4 billion. And it says also that the increase in top line was primarily due to higher year-over-year production and realized gold prices. So this is one of the things you're going to see with these gold mining companies, especially as the price of gold continues to go up. Assuming it does, because prices can go up and down. Supply and demand drives the market for any asset class. But, if you're a gold bug out there and you've been maybe stacking gold for a while, or if you're looking to maybe get into the gold market and maybe you don't own physical gold, but you're looking at perhaps some of these mining stocks, this is a highly profitable mining company, and so you're really participating directly in the gold mining space if you're investing in a company like Newmont Mining. So, but as this says here, the increase in top line was primarily due to higher year-over-year production and realized gold prices. Meanwhile, a decline in contractor and energy costs led to Newmont's earnings growth. The developments put Newmont heavy gold mining ETFs, including the iShares MSCI Global Gold Miners ETF, Ring, GDX, and SGDM. So there's a few picks if you guys want to check those out as well in terms of potentially benefiting from gold prices going up. And so this is just one of those deals where you have to consider your own investment goals and objectives, obviously. But yeah, you know, we talk about cash flow on this channel, so that's another reason why I wanted to mention this stock. And, you know, as they say, right, supply and demand drives the market. You had the opportunity down here to buy this stock at $33, $34 per share, $35 per share as it was trading down, and nobody really wanted the stock, and there's perhaps negative sentiment. I think gold really started making its move here, you know, the beginning of the year. But even then, Newmont took a little bit to catch up, and as we've seen from earnings, you know, ever since this earnings report, this was the one before the last, this was for Q4, right? And so December 2023. And so basically, we have a surprise here, and, you know, the revenue and stuff, there was also a surprise, but then that's really when the stock started to reverse. So you have increasing gold prices, you have a beat, and then you also have another beat right here on their earnings, right? A 52% surprise, apparently, according to FinViz here. And then, of course, revenue as well. So looking at these numbers, like, it, you know, the sentiment is changing for Newmont, right? And that's just a matter of supply and demand, buyers and sellers, fear and greed, and really that drives the market, right? So when you see a stock going down, it doesn't necessarily mean it's a bad company. It could just mean that sentiment is poor on the stock right now. Sentiment might be poor on the sector, or perhaps investors are a bit cautious because of previous earnings results, and they're waiting to see the next earnings report before diving in. So as we've seen this sharp rebound, it'll be interesting to see what happens. You know, we know that Newmont has been trading past $80 per share, as I mentioned. So could we see that again, especially if gold prices keep going up? I think it's definitely a possibility. What I'm most excited about, though, is those dividends, right? So even though they cut their dividend from 55 cents down to 40 cents, and now they're paying 25 cents, you still have a yield of 2.29%, and you still have the potential for dividends to substantially grow over the long term. You know, even though they might be cutting dividends, I would rather them focus on investing in the company. If they can't afford to pay the dividends right now, so be it. You know, they can always increase those dividends later, right? So that's the main consideration, is like how much in dividends do you want for a company versus how much in growth do you want? And I think that's a major consideration for a lot of companies, because when they're paying out a lot of money in dividends, they don't have as much money for growth, and vice versa. But of course, investors love dividends. I mean, who doesn't love getting paid for owning shares and doing absolutely nothing but owning the company? I mean, that's part of the benefits, and one of the main reasons I love talking about different opportunities in the stock market, real estate, and really just talking about passive income opportunities on this channel. So thanks so much for tuning in, guys. God bless, and we'll see you in the next video.